Hello, world. Welcome to the Shannon Joy Show. Hello, world, and welcome to the Shannon Joy Show. We're broadcasting live from the Joy Virtual Studio right here in the beautiful Finger Lakes region of New York State. It is so great to be with all of you today. It is Thursday, October 9th, and we have a big show for you today. You guys see the headline today, the AI mega bubble. It's the $1 trillion tech scheme that is driving much of the stock market growth and is now raising more and more red flags among the investing class. Today, we're going to be introducing you guys to an amazing gentleman. His name is Henry Yoshida. He is the CEO of Rocketdollar, which is an unbelievable investment company. It's democratizing investment for the little guy. We talk so often here on the show about parallel economies, parallel systems, as it seems our political class is bringing everything down on the heads of the average American, from instability in the markets, economic chaos, inflation as far as the eye can see, the war drums beating for World War III, blowing potential fishing boats out of the water off the coast. There's just so much chaos out there. And somehow, as the little people, we have to figure out how to survive, not only with our health and our families and our wellness, but also economically with our investments. And Henry is he's an unbelievable man. He has a great story, and he's been helping regular investors for his entire career. Rocketdollar is a great company, and I just can't wait to talk to him. So we're going to be bringing Henry in at the bottom of the hour. But the big question today is your retirement safe? We know, and we've been discussing this on the show for many months, that most of the gains on Wall Street, particularly over the past 5 years, have been dominated by tech stocks. They call them the Magnificent Seven. And this is Apple, Microsoft, NVIDIA, Amazon, Alphabet, which is Google, and Meta Platforms, also Tesla. Now, these tech stocks have also received massive government protection with the Trump administration and collaboration and partnership. Much of this launched in the first days of his presidency with the announcement of Stargate. So they're also getting cash, they're getting government benefits, massive government deals, and protections, which are being built into pieces of legislation like the Big Beautiful Bill. This has now driven what was once a frenzy and speculation, even more of a frenzy and speculation. And that, it's driving what many are now calling this massive bubble, right? And there are lots of problems within the tech industry, lots of hype about AI, and people are wondering, when is this going to pop? So a recent piece from Bloomberg is really beginning to further this conversation and the concerns, featuring a slightly alarming infographic, which has many investors concerned about the lack of diversification, that's not the only problem. It also explains how NVIDIA and OpenAI are fueling a $1 trillion AI market with a web of circular deals. Basically, they're all giving cash they don't have to each other in a circular fashion and not really accomplishing or producing any real value. And this we explained last week and with a great video, Nobody Special, on Twitter. It's a great Twitter account to follow. By the way, Jack, who is Nobody Special, his name is Jack Gamble, and he's going to be with us next week on the Shannon Joy Show for a full hour. But he was the one that produced the video likening this to Peg Bundy and her experience with a marketing firm, a Mary Kay style makeup selling firm. And it was, a hilarious video. But essentially, that video nailed it. And now we have Bloomberg reporting that these deals and partnerships are escalating concerns that the trillion-dollar AI boom is being propped up by interconnected business transactions, and there is nothing behind the curtain. Right? When you pull back the curtain, nothing is there. Now, I've been talking to investors for many, many months and years, frankly, about this. It is finally really pushing into mainstream that we could be looking at a bubble here. And the question is your retirement safe? As they're pushing all of us into technology, meme coins, tokens, Bitcoins, AI, the data centers. I have a great story here today before we bring Henry in about these data centers. Zero Hedge, multiple headlines warning that we could be looking at rolling blackouts and brownouts, particularly in Texas, because the hub of the creation of these massive data centers that span football fields and need nuclear power in order to run them, right? These are happening primarily in Texas. And so there was a tweet from Zero Hedge. I don't know if I have it here. Yeah, I think I have it right here. Very alarming. They're saying that there is no way. They're looking at the NVIDIA chip release schedule and reference rack architecture, and they posted a screenshot of this. I retweeted it yesterday. But Zero Hedge said the only way this can happen is if, one, there are rolling blackouts across the United States of America with electricity prices at 3 to 4 times higher than they are today, or they are planning on building nuclear reactors around every corner. So in order to power the Manhattan-sized data processing centers, which do nothing but surveil and collect data, violating the privacy of every American, every business. That's the only point of these data centers. They don't serve any other purpose but to collect your information, process your information, and then use it against you as the federal government moves to AI systems of governing and decision making. Another Twitter post that was pushed out by our good friend Mary Talley Bowden just yesterday, we're now beginning to realize that AI was used to develop the mRNA COVID shots. And they're looking to use your data, biodata, and artificial intelligence to create new versions of mRNA technologies to be used to treat things like cancer and future pandemics. So, this is the hype around this and the money being dumped in without real understanding as to whether or not they can even accomplish these things. We have seen the utter disaster with the rollout of the COVID-19 shot, the turbo cancers, the heart attacks, the myocarditis, pericarditis, the fertility problems, all of this driven in large part by AI decision making and data collection. And they're apparently seeing this as the wave of the future. So this is why. And then the creepy nature of it. I have another in my highlights here on the Shannon Joy Show, my top headlines. Elon Musk's creepy sex bots. This is a piece from Technocracy and pretty disgusting. The creep factor, the weird factor, the idea that most Americans really don't want nuclear reactors right around the corner, powering massive data centers to collect data on Americans and surveil them. It's all just getting a little bit too much. And there is, this new scrutiny. I can see it. The short sellers are circling right now, right? They see what's going on. And especially this idea that these companies are just stuffing money into each other's pockets and driving up false numbers, to drive up their stock prices. It all just seems very precarious. And this is why my favorite headline of the day, which we're going to get to in just a minute before we say a big thank you to some of our sponsors. Microsoft now has scrapped, this is awesome. They have scrapped plans for a Caledonia data center site and are now working to find an alternate location. This is a great story. We're going to get into this in this first segment of the Shannon Joy Show to let you all know that your voice does matter. Your local organization, what you do at the local level absolutely matters. And Fran, who's on the town council of the Caledonia Village, she's a hero here. And so we're going to look at this to see how regular organization and regular people can push back against a lot of this stuff. We are not anti-technology here in the Shannon Joy Show. Technology is good. We use technology to bring the Shannon Joy Show to you every single day. Even AI, the search engines are helpful in a lot of ways, but we do need to put technology in its place. And what these megalomaniac control freak lunatics are hatching for we the people of the United States of America is a little out of control. And so we just need to put them in their place. We're going to be discussing that today, along with some of the other top news stories. So we are going to go to the chat. I see all of you on the live chat. Karen Carpenter 27, Buskman, Be My Valentine. A lot of new faces on the live chat today, which I absolutely love. Jay Delfkey is with us. Brand new chatter. Love to see you. Brandon Bennett. Hey, CGP, I used to live in Fairport. I hear you're from up there. Brandon Bennett, we're from Fairport, right? The Shannon Joy Show studios are headquartered in the beautiful Finger Lakes region of New York State, right on the Erie Canal in the beautiful village of Fairport. So great to see you, Brandon. Love seeing new faces, as I mentioned on the live chat. We have CJP Rumble, of course, and Bill Benz is with us as well. Good afternoon, all. HBard 36 is with us. Good to see you. And Scott Gordon is here as well. We'll get some of your comments in just a minute. But I do want to give a big shout out to Vive Biotics, an amazing product that I have been using. If you have dealt with bloating, low energy, or just a feeling of being off in the gut, you're not alone. I have dealt with that myself. And it turns out that your gut health is the master switch for so many things: digestion, immunity, and even your mood. I have been obsessed with my gut lately, as you all know. And this is why I love this product, Vive Biotics from Perfect Origins. It is an amazing daily supplement. It has 15 different probiotic strains plus prebiotics, and they've put them through a special fermentation process so they actually will survive your stomach acid and make it to your intestines. And that's where all of the magic happens. I've been using Vive Biotics from Perfect Origin. I love this product. It is not your run-of-the-mill probiotic pill. This will help you restore your gut's natural biome to 85% good to bad bacteria balance. That's the magic number. And it's also going to help you improve your digestion, reduce the bloating, which I've noticed. I'm really enjoying my flat stomach, and it is just a natural mood enhancer. It's also going to boost your immune levels. And that's really important when we enter the cold and flu season, which we're entering right now. The mission is to stay out of the medical industrial complex, and you can do that by taking care of your daily health and making sure that your gut is in good shape. It is vegan, dairy-free, gluten-free, non-GMO, and they have an amazing offer for the Joy audience. Perfect Origins is teaming up with me to do a free giveaway. All you have to do is go to the link in the description box, and TJ is going to throw that link up right now on the live chat and in the comment section of the Shannon Joy Show right here at Rumble. But they are going to give away a free bottle of Perfect Origins, and that is only if you go to the link. It is www.perfectorigins.com/SJS. That is www.perfectorigins.com/SJS-VB. And you guys can see that right now. You can get a free bottle. Love the product. Absolutely love it. So thank you to Vive Biotics and Perfect Origins. All right. This headline made my heart sing. I posted it on my top stories, my top headlines for October 9th, 2025. And here's the headline: Microsoft, all right, Bill Gates scrapping plans for Caledonia data center site, and they're working now to find an alternate location. This was posted just the other day. Microsoft cites community feedback in its decision as data center projects across Wisconsin receive increased local scrutiny. Let's go, guys. This is awesome, right? And we're seeing this across the country. Again, if you're in Texas, you need to get your organizations put together fast. You need to get your email list going, go to those town meetings, get on the zoning board, get on your town board or your village board, because the massive data centers are coming for you. And they are going to tax your water supply, your energy grid. And there are a lot of questions here. So here is the headline. This should be exciting to so many people that, you know, that the knowledge that we can stand up, speak out, push back, and get these guys out of our backyard. Microsoft will not move forward with the data center. They were going to place it in a Racine County community. They now have to look for a new site. The company announced that its decision was based on community feedback. Many residents of the village of Caledonia were strongly opposed to Microsoft's plans to build a more than 240-acre data project in a rural area of the community. About 40 people, look at that, 40 people in your community standing up, speaking out, going to a meeting. This is what can take down a massive multi-million-dollar project that is slated to invade your town or village, right? 40 people showed up. They spoke out against the project, and this occupied a more than 2-hour public comment at a Village of Caledonia Plan Commission meeting last month. All right. So the move comes, as I mentioned, across as data center projects across Wisconsin. This is a very interesting development, by the way. I was looking up all of the major like government funded with grants and subsidies, data center projects that are being rolled out across the country. All of them are in red states, all of them, which is quite interesting. Blue states like New York State, I don't think there's a single data center. I mean, there are Manhattan-sized data center projects, right? But none of them are happening in New York State or California, to my knowledge, or any other blue states. They're all happening. The majority are in Texas. And here we're talking about Wisconsin, multiple projects that are rolling out across Wisconsin. This includes a proposal in Port Washington, so another town that drew strong local opposition just a couple days ago. Now, the county executive, Ralph Malicki, probably a Republican, said that that Microsoft did not seek local development incentives for its initial plan in Caledonia. But he also said he isn't sure how the search for a new site would affect the company's development timeline. He wants to move forward, but he was confused about the pushback the California proposal received from the community. He said it's obviously something we haven't seen. So he just sees a bunch of money dangling in front of him, and the big, Microsoft people come and dazzle him with, their presentation. He's like, oh yeah, sure. Let's put a data center right in the middle of a rural area, tax the local energy grid. He probably has no clue about the necessary water that will be required to run the data center, what it's going to do to the energy grid, what it's going to do. I mean, we have stories of towns and villages that had data centers erected that are like constantly humming, like 24/7 humming, that is having health impacts on the residents of the towns and villages. So it's just a disaster. But Caledonia Village trustee Fran Martin, so this guy is confused. Fran Martin to the rescue. Thank you, Fran. You're my hero. And she said, this was not acceptable to me at all, said Fran. And she's on the village board. She said, they didn't even tell us what they were going to do. Why was it done in such a secretive fashion and then rushed forward with no information? She said they wanted us to approve the zoning project without any details and even a peek at Microsoft's plans. So she said, listen, we're not going to do this. We need more information. She has nothing against Microsoft, but for the moment, they are going to pause on that development. And yeah, get ready though for the government grants, get ready for the subsidies, for them to dangle a bunch of money right in front of your local officials. And this is why we're going to need robust organization at the local level across red state America, because as we know, the Trump administration through Stargate is linking up with all of these tech companies. And this is going to be an initiative, I think, over the next 2 years. However, congratulations to Caledonia, a small little town in Wisconsin. Love seeing the locals push back. All right, guys, we are going to, Mr. Worthless Eater. Centers in Michigan have plans to create some more, but Governor Whitmer is a World Economic Forum person. And, I don't even know about that. Yeah, Ranger 1791, the real danger isn't the electric grid, it's water usage. You all will be blown away at our data. And thank you, Ranger 1791. Appreciate that. Yeah, I mean, this is going to be a big deal. So we're going to keep an eye on this as well as other topics. We're going to go to a quick break. Great to see all of you on the live chat. When we come back, we're going to bring in our special guest today. We're going to be talking about the economy. I know there are a lot of other headlines out there, a lot of clickbait, but I think what is going to matter to most Americans is whether or not their retirement is safe and what is coming economically. And there are a lot of very troubling headlines out there about inflation, about the health of the stock market, about the tech companies that are dominating most of that growth. And I'm just really thrilled to introduce you guys to Henry Yoshida. He is the CEO, co-founder of Rocketdollar, and he has been providing investment advice and help to regular investors over his entire career. He has a huge biography. We'll introduce him when we come back after the break, but we are going to be talking about how you can survive whatever happens, whether we're in boom times, recession, depression, war times, peacetime. There's always a way for the little guy to not only survive, but thrive. You just have to have the right information, good information. And that's what they're trying to do over at Rocketdollar. So we are going to bring him in just a minute. But first, we're going to go to a quick break. Thank you to our sponsors. And please remember to patronize our sponsors. We couldn't bring this show to you every day without the amazing companies, products, and services that are offered by our advertising sponsors. So as we go to break, keep that in mind. If you're in the market for any of their products or services, make sure you use them because it helps us to keep the lights on here at the Shannon Joy Show. All right, keep it tuned right here. We'll be back in a moment to continue the program right here on the Shannon Joy Show.
Have you thought about backup power for your home or office? Here at Satellite Phone Store, we are well aware of a lot of different scenarios where you may lose power. That could be anything from weather to emergency situations. And we are offering a simple, effective, expandable solution for your home, which is the EcoFlow Smart Home Panel.
This panel can be installed in line with the circuitry of your home or office. You have the option of 10 circuits that you wish to power in an emergency. This means that if you want to be selective on what needs power in an emergency situation, you can power just the vitals or more. What this means is that if you want, you can just distribute power to your kitchen, for example, giving you power to keep the refrigerator and cooking going without interruption. If you're in an office, this can serve to keep computers, hard drives, and servers running without interruption. More or less, this lets you tailor a system that lets you conserve and distribute power where you see fit. It is able to power water heaters, well pumps, and dryers. If the power goes down, it will automatically start powering your home in 20 milliseconds, making a seamless transition to backup power. The home panel works with the Delta Pro series, which is expandable. If you want a basic backup system, you can use just one, or plug in two at the same time, which are also capable of being daisy-chained to 2 more units and a smart generator, effectively giving you 25 kilowatt hours of power. If you want something to sustain you for longer, you can purchase as many units as you please as standby, that way you can alternate plugging into the system. The home panel will charge the units from the grid when they are not being used. And if you want, you can add solar panels to the system to continue charging your battery bank even if there's not power coming from the grid. There's also an option for a dual fuel generator that runs off of propane and gas. You need an app in order to set up your home panel. What you will be setting up is the voltage. You can customize the circuits with a name, amperage, and what kind of appliances you are running off that circuit. You can turn on and off each circuit through the app. You can also monitor how much power is being consumed by each circuit. You can create automation so that if the power goes out, it will switch to backup. This also allows you to use the backup system during peak hours from the grid, allowing you to save money when the cost of power is higher. Another really big advantage to the Delta Pro series is that these are portable units. You can use them camping, you can take them to another home, or you can bring them back and forth from your office.
Thank you guys for watching this. If you have any questions, please contact the Satellite Phone Store. We will also be coming out with more videos, so make sure you like and subscribe.
Welcome back, everyone, to the Shannon Joy Show. Today's topic, the AI mega bubble, the $1 trillion tech scheme driving much of the stock market growth that we have seen over the past 5 years, dominated by tech stock. This is raising red flags. A recent piece from Bloomberg really showing it's a very concerning infographic of the circular nature of investment by just a few companies. Today, we're talking to Rocketdollar CEO Henry Yoshida about this phenomenon and other critical aspects of the rapidly changing American economy. The goal here is to survive and hopefully thrive. And we are just facing highly volatile, a highly chaotic economic system, a lot of inflation out there, and it doesn't seem quite as golden as some in the government are telling us. It is worrying investors. Henry Yoshida is with us today for the very first time. Really thrilled to bring you in on the program, Henry. I've really enjoyed getting to know you. We've had a couple meetings over the past month. He is the CEO of Rocketdollar, obviously the co-founder, and I've learned a lot from you about investing. He is, with us today. Are we going to bring him up?
How's it going? Can you hear me?
I can hear you and I can see you. Oh, great to see you again. Like I mentioned, we've had such great conversations over the past month. You are an amazing investor. I love everything that you are doing for the little guy. And that's something that you have kept in focus for so many years, just so that you guys can appreciate the scope of his experience. And we're going to get into the discussion today about how regular people can take control of their retirement and their investments today through Rocketdollar. But Henry is, as I mentioned, CEO, co-founder of Rocketdollar. He was previously the founder of a venture capital-backed robo-advisor retirement plan platform, Honest Dollar, and the founder of My Group LLC. He spent 10 years at Merrill Lynch, and he's a certified financial planner. He has brought multiple innovative products and methodologies to the market. He graduated from University of Texas at Austin, has an MBA from Cornell University. So that's our backyard right here in the Finger Lakes region of New York. Currently lives in Austin. You have 2 daughters. And like I mentioned, what I love about your philosophy, and we're going to talk about your investing philosophy and your history, is that you really do want to democratize investing. You really do have at the fore regular people, whether it is, a boomer who has a retirement that they need to protect, or a millennial who is looking to build wealth, Gen Xers who have been saving for quite some time and don't really trust what is happening, within the markets right now. You talk about the consolidation of companies and,
Yes.
dominating much of the growth. And you're just looking out for the little guys. So I really appreciate that. And would love to get started. If you just, let's let you introduce yourself to the audience, talk a little bit about your history and your concerns about that consolidation, which we'll get into in a minute. But tell people about you, your history, your investing philosophy, and then we'll go from there.
Well, for me, Shannon, thanks first of all for having me on. And you're right, I did spend some time in your backyard. I'm a native Texan, so it's very cold for me. I consider winter anything below 45 degrees Fahrenheit. We haven't gotten there yet. We're still double that right now at this point in Austin, Texas, where I live. But I never actually planned on getting into financial services. Truth be told, it was actually a stopgap. Merrill Lynch is where I started my career, and I took the job because I needed to actually save money to try to go to law school. So that was my plan. So I didn't really seek out financial services, but when I got into it, it was immediately a system and an organization that was set up to go try to talk to very wealthy individuals, right? So the idea was to go find the wealthiest people you knew, and then you help them, you try to get them as clients, get them to open up an account at Merrill Lynch. And that wasn't really how I grew up. I'm the children of immigrants. Both parents worked in the restaurant industry. And in 1992, the one time they did come into a windfall of money, it was a big windfall for them. A distant relative left them $50,000 equivalent US cash. And they signed up with an insurance agent who sold them a hybrid insurance and investment product. And they actually lost the money inside. So that was like sort of the one thing. And what I learned many years later was thinking that, this probably happens to other people, not just my parents who weren't really assimilated to United States culture, the language. And when I got a chance to go into Merrill Lynch, for me, it was supposed to be a stopgap for a couple of years to save some money and go to law school. But I ended up really falling in love with the particular niche I got into, which was 401k and retirement plans. And it was because I got a chance to actually talk about the basics and right at the beginning of how to save and invest and save money and learn about the great tax advantages in these types of accounts and just communicate that to folks while still succeeding within this Merrill Lynch system. And that's what stuck with me ever since. And as I've gone through my career, I talked about these types of accounts, the tax advantages, kind of diversifying, and the markets have changed. And my most recent company, Rocketdollar, is changing with those times as well, which is that now, essentially what you mentioned in the intro, Shannon, was that really the institutions, the wealthy individuals are going into these deals that are private, and the public markets are basically where the average person is today. They don't have access to some of these companies or different asset classes, the ones that have the real outsized chances for growth. And we talked about this in our conversations, but those opportunities used to actually come up in the stock market in the 90s, maybe even to like the very early part of the 2000s, but they don't anymore. And I'll caveat this with an example that a company like Amazon, right? And I think they have a big sale going on right now. Second day of it, I bought myself a new waffle iron last time. It was 50% off. So,
how did I miss the Amazon sale? Wait, hold up, Henry.
It's still going on today's the second day. It's a prime deal day. So today's the second day. So once you finish here, get on your phone.
I have lots of things I need.
Yeah. So
go ahead.
Before I get into the Amazon example, just so you know, so today I made a waffle that it was stuffed with a Three Musketeers candy bar. So it's a stuffed waffle maker. That's what I gave my kids for breakfast today. So I was like super dad this morning.
Best dad ever.
Right. But when that company went public, which it's only been public for 25 years, they went public doing roughly between $30 to $40 million in annual revenue. So people had a chance to invest in the stock, AMZN. It's been that ticker symbol ever since. They had a chance to get in the very early days into what now is one of the largest companies, most successful companies to ever exist in the world, not just the United States. But you look at the example of, let's say, the big tech company of today that we probably talk about on the show. We talk about it every day. It's going to come up in our holiday conversations here, only 30, 40 days away. But OpenAI's ChatGPT, right? It's managed to stay private. So the only people able to invest in that are major corporations, large institutions, wealthy individuals, and so forth, because they haven't gone public, but they're already valued at close to $500 billion or $500 billion. I'm sorry.
Wow.
But that opportunity that existed 25 years ago to go into one of these stalwart companies of today doesn't exist for individuals today. So creating Rocketdollar was a way for folks to access the existing retirement dollars and go into private investments. Those could be shares in a private company, could be real estate, could be precious metals, of which gold is hit roughly 20 record highs so far in the year 2025. Just hit 4,000, and so forth. But that was the genesis for Rocketdollar. Was as I went through my career, I realized that now someone needs to create a chassis, a vehicle, a company that makes it really easy for folks to tap into monies that they already have, to go into investments that may not just be listed on your Apple Stocks app or available at Charles Schwab or Fidelity or through your financial advisor at Edward Jones or Merrill Lynch. And that's what we do, and we've done that now to the tune of $12 billion for customers.
That's amazing. And that's, one of the things that I have written, I've in explaining what you just laid out there is in a way democratizing investing, giving people the opportunity to use their own unique knowledge, expertise, their knowledge of their local communities. One of the things I love about Rocketdollar that is very unique is the opportunity to invest in real estate. And this is coming as we've seen multiple headlines over the past couple years. Buying or purchasing a home is becoming out of reach for, so many Americans as those prices are being driven up. And we're seeing some major corporations like BlackRock going in, buying up entire, housing developments to turn over and use as rentals, right? And to drive profits through rentals. I mean, it's tragic. I mean, we need to fix this somehow so that my kids can buy a home at some point. But when you go in, the ability to tap into some of your retirement and invest in your own community in a property or a rental is huge. Can you explain that to the audience, how something like that would work using, because I'm thinking of my brother-in-law and, my sister, they have a nest egg. They've had matching funds in their 401k for many, many years. They've done well because the stock market has done well. It's provided good returns up until now, at least for my demographic. But, they're not necessarily comfortable with where things are going. And I know they would love to buy a real estate investment property. I'd love to buy an investment property in my community, whether it's commercial or private. So how would it work for someone who wanted to go in that direction?
Yes, and you're right. I'm a big advocate of the democratizing of private investments, and people. The thought process and the idea of doing this is great. Now, the problem with the average American investor, let's say like your brother-in-law, is that they've accumulated monies in these retirement accounts, and those accounts are typically restricted. They're with a provider that only allows them to invest in these stock, bond, and mutual fund type of investments. And that's where the capital is for the average American person. So we talked about this, that these accumulated retirement accounts, US only, now are approaching $35 to $36 trillion of capital. And they're 99% or more invested in just stocks, bonds, and mutual funds. But that's where the average American person has accumulated their money through their 401k savings at their job, and then they roll them into an IRA. And at Rocketdollar, we allow people to open an IRA with us, but the IRAs are capable of investing in private and alternative investments. So something other than the stock, bond, mutual funds. So you mentioned real estate. Real estate's a great asset class for a number of reasons. One, right now, it actually is very uncorrelated to the stock market, right? It's It zigs when the stock market zags, for example.
Right.
Back 20 years ago, the bond market used to zig when the stock market zags. Now public investments kind of tend to mathematically tend to run together. So you got to find something else to diversify that nest egg of yours. Number two, there's a great buying opportunity, as you mentioned, that so much so that private equity firms, a publicly traded private equity firm, Blackstone, that's the name, Blackstone.
Sorry, I said BlackRock. Wrong company.
Right.
My bad.
But let me caveat that real quick before I continue with the real estate. BlackRock is actually the largest asset manager in the world, and they have the controlling share of votes in the largest amount of public companies in the entire world because they own the index fund. So in a way, they're the largest shareholder of most of the companies in the S&P 500. And if they choose to vote, they could fire the CEO, change the board of directors. They have that power. So BlackRock is an 8,000-pound gorilla in the public stock market. Blackstone is the 4,000-pound gorilla in the private equity space. Blackstone may actually be your landlord. They may actually be your neighbor because they do own hundreds of thousands of homes across the world. Single-family homes, by the way. So they could very well be your landlord or your neighbor.
Can I pause you for a moment there? Because there have been, I'm not kidding, over the past couple years, there have been multiple sales of properties in my village. It's a beautiful village on the Erie Canal. I mean, the housing prices have gone insane. It's ridiculous. I can't afford my own house. That's where it is. If I tried to buy my own house at this point, I couldn't. That's how bad it's gotten. And there are multiple homes, Henry, that have been purchased. They came in because you hear the gossip in the village and how things go down. All cash offers, driving up the prices. No one's living there. These gorgeous houses that look like they're like beautiful, built in 1870, pristine Victorians that are completely empty, and they're sitting empty. And I'm like, what is going on with who is buying? Who has the money to buy these houses and just sit there and not move in and just let it sit? They don't even have renters. It's very weird. Very weird.
Right. So that's who owns these now. Institutions own them. But going back, real estate is a tangible asset for folks to own. That's another thing that makes them a great investment. And they if you own them and you rent it out yourself, and you're the owner now, using, let's say in our example, some of your 401k or IRA monies, because you've now opened an IRA at Rocketdollar, which enables you to purchase an investment property using real estate, which is actually our number one asset class among our customers. And then as your tenant pays the rent, that actually goes into your IRA as cash. And since it's in an IRA, there's deferred taxes on that. So all the characteristics of an IRA, where that's not counted as ordinary income, you can accumulate the cash, and maybe after a certain number of years, you might be able to purchase a second property. And at some point when you're of retirement age, you could choose to just have that rent income come to you and just pay taxes on it. So what we tell people is that the democratizing investments and saying that is great. Now, the second problem, if you're a normal person in America, is, okay, I like the idea, but where am I going to get the money? And that's where $36 trillion of United States American average investors' money sits today. And my thesis is that, as you mentioned, Shannon, it would be great if this could stay in the same local ecosystem, right? So you have someone who worked at a company for 30 years in the Finger Lakes area, accumulated $600,000, $800,000 in their 401k, decides to take half of that, open up an IRA with Rocketdollar, and purchase a property, an investment property somewhere in the region, and now is able to rent this house out to someone who's able to move to this region or live there and be your tenant. So all the money kind of stays in the ecosystem, because what happens right now with money is that Blackstone in New York, or BlackRock also in New York, puts the money into your community. Then they start renting it out. The tenant pays the rent, goes back to them at the home office, right? None of this really stays in the local area. It's getting sucked out. And that's kind of, the genesis of Wall Street too, right? They used to run commercials saying that, Wall Street was there to serve the people who live on Main Street, but that's actually not really the case, right? The idea is that Wall Street, collects all the money from investors who live on Main Street. And they're two very different places.
It's absolutely true. And it has become more and more consolidated over the past, exponentially over the past 5 to 10 years.
Sure.
We also talked about, and this is another big problem. This is why people are so concerned about putting all of their eggs in the Wall Street stock market basket when it comes to, accumulating wealth, protecting wealth, saving for retirement. It's dominated now. I mean, you cannot overlook how crazy this infographic is that was pushed out by Bloomberg yesterday regarding the circular investment strategy of all of these major mega tech companies that are dominating most of the growth in the stock market over the past 5 years. And so there are concerns now that this is a bubble. We can talk about that. But it also very clearly illustrates what you and I talked about a couple weeks ago in the shrinking of the number of companies that are playing in Wall Street, right? Like it used to be thousands, and you could go in and it was America. It was American companies that made things and built things and kept the money in the family, so to speak. And they've been largely pushed out or gobbled up or seized or purchased by these massive global corporations, tech stocks, who are just acquiring. And it's now as if, there really isn't a whole lot of choice when you go to the stock market, right? It's all kind of going to the same people. Can you explain that phenomenon to the audience so that they understand? And maybe we can get into this piece by Bloomberg and the concerns about the tech bubble, because I think they're real. I'd love to hear what you have to say about that. But first,
Sure.
what has happened in the stock market over the past 20 years that concerns you about the fewer players on the court?
So it's really weird. There's a chart. It's a lever. So when I started my career in the year 2000, there were many more stocks that were publicly traded. So we're talking in excess of 10,000 publicly traded companies in the U.S. At that time. You flash forward to the year 2025, there's actually less than 4,000 publicly traded stocks, closer to 3,500. So the number of publicly traded companies has actually shrunk. For a number of reasons, right? It's hard to be a public company. There's a lot of reporting requirements, but largely it's because companies don't have to go public and they can still get access to capital from sovereign wealth funds, institutions, endowments, and the wealthiest people in the world to stay private. Again, we go back to the OpenAI. This isn't a conversation about AI. I'm just using it as an example of a company that's been able to raise hundreds of billions of dollars without having to sell their stocks on the New York Stock Exchange or the NASDAQ to the average American investor. So companies don't have to go public because they can access the capital they need to grow. And when they access the capital they need from a very concentrated group of people, it's a very small group of wealthy individuals and institutions who are receiving the spoils and riding the value of these companies up. Hence, no Amazon coming public at $40 million in revenue. And so, but in that same time period, that same 25-year time period, the number of mutual funds, which mutual funds are defined as a basket of either stocks or bonds that an investment company like a BlackRock or a Fidelity or a Legg Mason, American fund, so forth, puts together, and they have a portfolio they manage, and then they sell that package to you, kind of like the value meal is sold to you. The individual pieces, they choose what's inside of those individual pieces. The number of mutual funds is now in excess of 10,000, while the number of stocks that they actually invest in are less than 4,000. So it's just completely opposite. So, think of it as that the individual components are only 3,500 pieces, but the people who are selling like some sort of pre-packaged value meal to you is in excess of 10,000. And that's completely changed in the last 25 years. And that leads to this concentration. And, what you're talking about, that this circular rotation of these tech companies and a possible bubble that it could cause, the largest contracts that these tech companies have actually signed are actually with each other. So that's another thing too. So that's what's been driving it, right? You had AMD signs a deal with OpenAI.
Right.
NVIDIA signs a deal with OpenAI, or Oracle signs a deal with OpenAI, a company that's not profitable, and they signed a multi-year contract for $50 billion or $100 billion revenue contract. But the company doesn't have the current cash to do this, but it raised the value of the stocks of the ones that are publicly traded. So it's as if, Shannon, you and I decided that we would do a contract. I'm going to come and remodel your house in the Finger Lakes region for $100 million, and I'll do it sometime over the next 50 years. Since we're doing a $100 million improvement to your house, well, your house is now naturally worth 5 times that. So now your house is worth $500 million, clearly.
Love it.
But I have not executed the contract. I don't have the money to pay you $100 million. But at some point, we signed this contract, and that's great. So that's what's been driving the value of some of these stocks signing deals with each other. And that, to me, is scary. And I know the headlines are recycled, right? Bubble this, bubble that. We've all heard it before, and the stock market continues to hit all-time highs. But that example I used very flippantly is kind of what's happening at the highest levels with the most sophisticated corporations in the world right now.
Well, absolutely. And it's like they're all playing over here and shoving us into investing in all their stuff over here. And then on the down low, they're all buying real estate and gold and silver and a bunch of real things. It's like they're almost pushing us, or pushing the regular guy into, this system that I don't want to say it's rigged, right? Because people have done well with the stock market, and I still have stocks. I'm in the markets. I mean, Don Polano is my financial advisor. I love him to death. I've been with him for 15 years. He's great. And I have stocks and bonds, and there are lots of good companies that you can invest in, but it's this idea that all of our investments go into this one place and it's managed by a fund manager. I mean, you were even talking about that regarding how different we are in the United States in terms of investing. Like when we have money, we kind of just throw it out there to, some mutual fund. We don't really know what's going on. We don't really trust ourselves to make decisions about what we invest in or investing in our local communities. And you said that's kind of different. I mean, this philosophy is very different than what you see in the rest of the world and how people accumulate and protect wealth.
Right. The rest of the world doesn't have the immediate first reaction when they come into a windfall of money is not to invest in the public stock market of that country. It's to do something else, right? Oddly enough, it might be to support some local businesses, maybe start your own business, or maybe purchase land or real estate, right? That is actually the first instinct reaction of other citizens of other countries around the world. In the United States, we've come to trust, for better or worse, our stock market in that, well, if someone were to just give you $5 million tomorrow and you wouldn't do anything stupid and just spend $5 million, you'd probably sock away 3 million or 4 million of it, and then maybe do something, buy some things for yourself, pay off your debts, with the other 1 million and so forth. But that first instinct reaction is to put it into the public stock markets. And what we talked about in our conversation, not about waffles then, was that really this concentration, if you were to do this now, you're probably most likely investing in an overweighted way into the largest 7 companies in the United States, all of which exist in the same industry, all of which right now currently are executing their largest contracts amongst each other. Yeah. And one that's not publicly traded that's almost nearly the same size. And that's what's driven their values or their stock price, maybe not the value, but the stock price itself.
It's recently. Concerning.
And that scares me.
Yeah, no. And I think that I think it's kind of an elephant in the room. Everyone I'm just, waiting for the short sellers to come in. I feel like I already see them sniffing around, you know what I mean? Like, what is happening here? Is there real? I mean, and they're talking about we're going to go to break in a minute, and then when we come back, I would like to talk about the economy as a whole right now, because you can't separate these 7 companies from the federal government at this point, because they are so intertwined, they are so invested in one another, and we now have our federal government planning, with the big beautiful bill to print more money, to devalue our dollars even more, making it even harder for people on Main Street and American families as we grapple with inflation in pretty much everything. But so there, the hype and the level of investment and dollars that they have to print going into these companies, like, it just seems like a huge dumpster fire to me. I don't know how else to explain this. Like, you're printing money. Like, we don't have any money, Henry. We're printing money to shove into the pockets and invest in, and then again, I'm not anti-technology. I like technology. It's okay. But Manhattan-sized data processing centers attached to nuclear reactors, like, across the country, to generate. I just mean, like, what do you make of this? I mean, it seems, I don't know. It just seems to have gotten out of control to me. Like, I like some of it, but the hype is just too much. Your thoughts on that before we go to break?
Well, you're right. The hype of some of it, and who knows? There's some good things that the administration is doing. Right. The one of the proposals is that the administration is actually thinking about not requiring companies that are public to report quarterly, but instead report every 6 months or year, which hence may allow more companies to choose not to stay private, and instead of getting money from a few wealthy individuals and institutions to grow their businesses, they may choose the option to sell shares to the average American investor on the public stock market. So that could be a good thing. But there's a lot of moves too where it is this sort of shoveling, moving pieces around and just printing more money. That doesn't really help, right? And that's scary to me because it is sort of devaluing. I mean, in every other person's life, like an average individual person's life, we might think about that, okay, we're a little bit overextended, so we should buckle down and start to pay down some of the debt, right? In our case, we don't have the choice to say that, well, I've got a large amount of debt, so let me just go ahead and, double my salary by creating more dollars, and I'll just put that towards that debt, right? It didn't actually get paid down. Situation. So we don't have that option. Like that's the objective option, is to tighten the belt, start to take that part down, because now the interest payments are becoming cumbersome or not one that we can sustain. Now at the government level, we can sustain it just by printing more money, but it's clear now with let's say precious metals and gold at record prices that the rest of the world is losing confidence in loaning us that money. That's what we relied on, and that's the scary part. And not only are they losing confidence, they're actually now using some of their own economic weapons to challenge us too. So for example, right, China decides that they will stop buying soybeans from the United States. That is very bad for us. They can pull this lever. They could say that we're going to stop buying U.S. treasuries and holding them, and we're going to stop buying one of the products that you export to us. That's going to hurt us in both ways. What are we going to do to solve that problem? There's nothing we can try to print more money, but that on the surface level looks like it helps, but long run actually hurts and devalues.
Well, yeah, that Donald Trump, he said we're gonna bail out the farmers, Henry. We're gonna, what is it, 10 billion? I think this is in my show notes. I actually have it linked in the show notes. The bailout is coming. So, he said, tariffs aren't taxes. It's not going to impact our economy. And now, we pursued this tariff policy. We really, irritated our trading partners around the world. And now they're taking their toys and going home. They're saying, listen, we can get soybeans from someone else. And so now, that industry is collapsing. The farmers are yelping, and Trump's like, okay, we'll print some more money. We'll print you some money from the money tree I have growing in the backyard at the White House, which this is why I'm really glad that I'm working with you. I'm really thankful for Rocketdollar, because I think this is actually a tool that can be used by so many Americans to take some control. Listen, there's so much that we cannot control in this world. I can't control what's happening in Washington, D.C. We cannot control what some of these companies are doing, but we can control what we do with our assets, our retirement. We can make decisions. And I never want any of you watching, when we talk about some of the doomy, gloomy things, to think that you don't have any power, that there's nothing you can do and you just have to like sit back and accept this. There's a lot you can do. And it's why we've come together, Henry. And because this real estate, gold and silver, crypto. I don't love crypto, but if you love crypto, and I think there are, some people really like that as an alternative. It's like a freedom, type of investment. Internationals too, right, Henry? Like you could do international companies as well.
It could be private companies, international. These are ways to deploy that existing capital. I mean, the number I always use is that there are almost $36 trillion in retirement accounts. If you close the loop. So right now, this circle of money in that 36 trillion is invested in a highly concentrated group of the largest publicly traded corporations. Well, what happens if $1 trillion of that or $5 trillion of that starts to come out and starts to get reinvested into real estate that is within 100 miles of the individual's retirement account that funded it? Right? You're talking about a fundamental change in how money circulates. So instead of this wide circle that goes over New York City and out to the 10 largest companies in the world, it then stays in a closer knit circle around the Finger Lakes region, around Central Texas, around the Midwest and Columbus, Ohio, and so forth. Because most people aren't going to buy real estate property sight unseen 1,000 miles away across the country, right? They're going to buy something 35 miles away on the other side of town because they have a bet that things are going to grow there.
Right. Well, and they have unique knowledge. They have unique insights and knowledge about what's happening in their communities. We're talking to Henry Yoshida today. He is the CEO of Rocketdollar. They are sponsors of the Shannon Joy Show, and I'm so thankful for their sponsorship. You will see, we're going to pop up the URL. If you want to learn more about them, make sure you click on that. There is a guide that can get you started. And we're going to continue this conversation. Let's take a quick break. And when we come back, I want to go through some more scenarios, some more examples of how people can take, this economy that is very volatile, chaotic, and looks like a bubble to a lot of people, and pull themselves out in some way into a parallel economy or a parallel system to, protect themselves when things fall apart. And so I'd love to go through a few more examples. Maybe we can talk about some of the younger generations, Gen Xers and millennials. They're trying to buy a house. They're trying to save for their own retirement, and they're being blasted by inflation every day. It's ridiculous. So let's see if we can't help them out when we come back. Henry, you're great. We're going to take a quick break. We'll be back in a moment. Keep it tuned right here.
Rethink how you build and deploy your retirement wealth.
Traditional investing is dead.
Aggregated total of monies in retirement funds in the
there
U.S.
you are, Henry.
are
Love
pushing
that.
$35 trillion right now.
The capital's there, and it's invested in just basic stocks, bonds, mutual
Can you hear
funds.
me, Henry?
And I think that the investor of today just needs to expand what they can do with that money.
So with Rocketdollar, you can make private and alternative investments, single-family property, homes, limited partnership investments in private equity and venture funds. It could be even cryptocurrencies or digital assets and everything in between. Holding real estate next to your public stocks, and I always joke around that it's no longer the S&P 500, it's the S&P 7. And dollar for dollar, if you own these inside of IRAs,
You typically end up getting 20 to 40% better annual returns than owning the same investment outside of that IRA account, because you don't have to pay taxes on an ongoing basis. I have parents who have no retirement savings because they work in the restaurant industry. I love that I figured out a way to
just wanted to say hi, Henry. You're doing great.
Main Street, normal working individuals. People
is there,
that it would have changed.
Is there
the course
anything
of
you
my
want me to
parents'
ask you?
lives if
Anywhere
they
you want
met
me to lead
someone
you?
like that.
This is Jennifer with darkbags.com. I wanted to show you our latest product. This is our laptop sleeve that has a
TJ, I think
over-the-shoulder carrying strap, as well as these two straps on the side.
TJ, the audience
so you can kind of hold it like a briefcase. What's special about this is that there's actually a Faraday bag built in to this backpack that fits up to a 17-inch laptop. So here's my laptop. I'm going to put it in. Once you put your laptop into this sleeve, your company can no longer track you, because they do track you after you log off of work and you put your computer to the side. They're still tracking you wherever you go. Another thing that's awesome about the Faraday pouch that's in this bag is that it blocks excessive EMF radiation that's being emitted to you, so that those harmful pulses will not reach you. And also, in case there's an EMP, this protects your electronics from the EMP. So not only does it fit your laptop, you can put your phone, you can put your wallet in here as well, and it will be protected. There is cushioning on the sides, so it'll keep all of your electronic accessories safe in here. This will be available on darkbags.com.
Shannon Joy here for PCM and Associates. If we've learned anything over the past 4 years, it's to expect the unexpected. Well, proper asset allocation can minimize the impact of the unexpected. From inflation to tax rates to energy efficiencies, we can never really know what we're going to get. Allocating funds among various categories like growth, income, international, tangible assets, and cash can help investors prepare for anything. PCM and Associates practices asset allocation for a rate of return. Call Don Polano today at 1-800-536-1368. That's 1-800-536-1368 for financial independence with a wealth manager who shares your values. Call Dom today. The Shannon Joy Show. Yes, classic Shumble right there. Sorry about that. You guys could hear us in the break. Good thing I wasn't yelling at my producers or anything because, you never know what's going to happen on a live mic. No, I'm just kidding. Sorry about that. We are back. We are joined by Henry Yoshida, Rocketdollar CEO. We're going to bring him in just a minute, but I do want to say a quick word about kimchi. Let me ask you something. When was the last time you guys thought about your gut health? Most people don't realize this, but your gut isn't just where digestion happens. It's where your immune system lives. It's where your energy is regulated. It's even where your mental clarity and mood are shaped. Kimchi One from Bright Core Nutrition takes everything powerful about fermented kimchi, over 900 strains of probiotics, antioxidants, and enzymes, and puts it into a convenient capsule that you can take daily. No mess, no prep, no strong odor, just results. And as you all know, I have the palate of a 10-year-old. The idea of eating fermented cabbage is just something I just can't do it. Hot dogs and macaroni and cheese. I know, I get made fun of for it all the time. But I do love to take care of my gut. And I absolutely love this product from Bright Core Nutrition. You can expect to feel more energized, be clearer mentally, and have smoother digestion. Over time, you are also going to see amazing anti-aging benefits, great skin, great hair, and a flat tummy, less bloating. Now, they have a great deal for the Joy audience right now over at Kimchi. If you go to www.mybrightcore.com/joy, that's mybrightcore.com/joy. They have straight off the bat 25% off. But if you call the 800 number that is on that URL website, they will give you 50% off plus a free bottle of vitamin D3 plus free shipping. So you know that they are so confident that this product is going to work and that you're going to love it, that they're giving away, a free bottle of vitamin D3 plus 50% off. So go to mybrightcore.com/joy. Your health starts in the gut. mybrightcore.com/joy to take care of this limited time offer. Okay, Henry Yoshida is with us again. He's the CEO of Rocketdollar. We're talking about how regular people can survive, how they can invest, how they can diversify out of what many believe is kind of a rigged system on Wall Street, right? People are worried about bubbles. They don't see that the returns that we have gotten for the past 20 years are going to be there. And they want to take some control over their investing. Rocketdollar does that. And Henry is explaining this to us today. How does the IRA work? So if people want to take a portion of their retirement or set up an account with Rocketdollar so that they can save into an IRA, what are the steps involved in the process? And then we can, hopefully talk about Gen Xers and some of the younger investors who want to get involved in some of the stuff that are very interested in how to save for themselves as well. But how does the IRA work?
So our IRAs, when I started the company, I recognized that in in modern times, we need to be able to allow our customers to open an account online. So it's no different than opening an IRA account at any other provider. So you can go from your phone or from a desktop computer. You would go to rocketdollar.com and you just provide the basic information needed for any investment account. So name, social security number, address, qualifying information, because we have to know that you are, in fact, who you say you are. And then once that account or the account is open, you get an account number. Now, the difference in our accounts and the mechanics of how they work are that at this point, like any other IRA, you can transfer monies from an old account into this. So if you have an existing IRA anywhere, an existing Roth IRA, you just open the same type of account with us and you transfer the money in. So you do that online inside of the portal. This is no different than if you opened at a regular financial institution. And when the funds arrive, this is where it's a little bit different because it's a private investment, not a stock. So you don't just enter a symbol and you decide how many shares you want to buy. Most of our customers, all of our customers, we're kind of a bring your own deal. So these people already know, right? Because we talked about this earlier, Shannon, that it's a deal that they know about, a property they want to invest in, or a real estate syndication unit they want to purchase because they know personally the person putting together the deal, for example, to buy an apartment complex in XYZ area of the country and so forth. So once the funds arrive in our account, the easiest way to think about it is that you actually operate your IRA dollars at Rocketdollar similar to a bank account. So when you have an investment that you want to do, let's say it's a $250,000 property or a $50,000 limited partnership unit into a real estate syndication, or to become an investor in a private fund, or to directly invest $50,000 into a small private business that's accepting outside capital. You would then just get the information, the IRA. We have an integrated bank portal. You would get the name of that investment and you would deploy it from inside the Rocketdollar portal, no differently than if you were just sending an ACH or a wire out of your bank account. So we've tried to basically create these known methodologies for opening an account, for transferring monies into an account, and then for deploying funds. Now, this is more of a bank account transaction and pushing them out to an outside entity. And since it's done within our portal, the money is actually your IRA money to go out into these private investments. So we maintain, so what we tell people is that you pay us to maintain the status of the account as an IRA. You get to go be your sort of personal investment advisor to go into the private deal, that real estate, because you know this area of town is going to be gentrified and changing over the next few years, and you want to take advantage of that opportunity here in late 2025 and so forth. That's the mechanics of how they work. But the sign-up process is 2 minutes. The transferring funds in is no different than any other provider. So a few business days, mostly dependent on when the old firm releases the funds. And you finding and deploying money into the deals is also at your sort of timeline as well. So that's it in a nutshell. And that's really consumer-friendly and driven that way. And all the information is on the website. But even in 2025, we have a phone number and people answer that phone all day long if you just have general questions about how that works. So same phone number
we'll get
we started.
I love that. Okay, maybe TJ can rustle up that phone number from the website and we'll pop it up into the live chat. So I'm loving this. I'm loving this so much. Recently, I told the audience, I've recently transferred all of my business. I was in like a big fancy bank, like multi-global national like bank, whatever. And we moved all of our money over to a small local federal credit union, like everything, my business, our family. And then we even got our credit card through our local credit union, as opposed to some of the big guys, because I'm just really into this. I'm into, I just, I don't trust these systems. I don't trust a lot of the institutions right now. And, maybe I'm wrong for that, but I feel like they've just lied to us about so many things for so many years, and the writing is on the wall. And, the other thing I like about this, so we've been talking a little bit about real estate, but there are people who have decades of experience. People have been in the workforce who have experience in different industries and different technologies and different, and they have unique information that would make them quite able to pick stocks or pick companies that they know, based on their unique information and their expertise and their long history, are going to do well. And that's something that they can do as well. I mean, they can go out and use their own decision making to to pick stocks that say, I don't know anything about tech, so I would never pick a tech stock ever in a million years.
Right.
But I know about media. I know about marketing. I've been in media marketing for 25 years. I know a good, PR company or media company when I see one who is doing, things well. I would love to be able to invest in that. Go ahead.
Yeah. So that's the thing. Everyone has their own unique area of expertise, like whether that's just knowledge about their local market, knowledge about this industry, or just that they have the opportunity to back someone or back their business because they know they're a winner. We've used tech and used some of these big tech examples, but some of our investments. I was just talking about this in an interview last week, but one of our first 50 customers at Rocketdollar opened up an IRA, retired commercial banker, so accessed their 401k, rolled that to an IRA with us. And, this person was our typical client persona. So had about $500,000 saved up in this 401k, with $400,000 of it went to a traditional advisory firm and went into just a diversified portfolio of public stocks, bonds, mutual funds. But with the 100,000, they had the opportunity. So he was a banker. He just retired. And he met this entrepreneur. They were doing a banking deal for them before he retired. And the entrepreneur was going to start, and this was 2018, mind you, this thing. He's going to create a pickleball league, pickleball. And the banker actually, was given the opportunity to invest as an equity shareholder in this business. And it was a phenomenal investment for him because this was 2018 and it became big. It was the first organized professional league, and it grew,
my gosh,
and grew, and it was a 4-figure return in this person's
wow.
IRA for them. Yeah. And their job gave them access to interesting entrepreneurs, interesting real estate developers doing things. And he just said, this person, everything they'd done, they'd always been a winner. They retired, actually ex-professional tennis player. Career got cut short due to injury, ended up coaching at a Division I college, but the injury was related to the person's knees and ankles. So pickleball was a sport they could pick up, got really good at the sport in the early days, decided that there was no professionalized league around it, got some investors together to create this league. And since he was the banker, his bank was working on a deal for it. They came to know each other. It was his relationship. He was the relationship manager for that thing. And he said, look, if you'd like, we have a group of friends and family investors, would you like to become an equity investor? And, he didn't have $100,000 lying around. But the funny thing is that the person in America who doesn't have, let's say, 10,000, 25,000, 50,000, 100,000 just lying around in their bank account to make an investment usually has 100, 200, 300, 400, 500 lying around in 401ks and IRAs. And that's the magic of Rocketdollar, which is that we let people tap into monies that they already have to do investments that they previously couldn't do before with their IRA dollars, and hence the Rocketdollar, right? The idea is that you can go places in a rocket that you can't go to by walking, taking a bike, or driving a car. That was how we came up with the name. My older daughter was 6 years old at the time. And my thinking was that I was testing all these names, and if I could explain that concept to what the company might do to someone that was much younger, then it would work, and so forth. So that's how we came up with the name of the company. But that was a phenomenal return. It was just their job gave them an opportunity to meet an entrepreneur who was getting into a new space, and this banker was already, 61 years old, was going to kind of hang it up and start to live off of the income that his 401k could generate, and then met me, opened an account with Rocketdollar, invested $100,000, and then that $100,000 far exceeded the other balance in the 401k.
What I love about that, it is Main Street. It is relationships. It's people trusting their experiences, their instincts, their relationships. And in so many ways, Henry, it's like we trust political parties for whatever reason. I don't know why people trust politicians. I really don't know. We trust institutions. We trust multinational global corporations to take care of our money. We don't trust ourselves. And I'm not saying, there is risk here. I don't want to sugarcoat, this, because when you're going into something like this, there's risk, right? That, you have your retirement and you're taking portions of that money, to invest in something that you think is going to be profitable or be a safe haven. In this case, even a safe haven. We haven't even talked about safe haven. I'm going to have you on again in a bit, because there are people out there. Some of the questions on the live chat, right? You have questions are saying like, what happens if the bubble bursts? What happens if the stock market collapses? Like, I'm nervous. All of my money is in this one entity,
right,
and I don't have a hedge for it. That's a whole different conversation. But I do love the way that business naturally goes. Like, Henry, I've been doing business for 15 years. I've owned my own business for 12 years.
Mm-hmm.
And my business is kind of handshakes. I make deals. I have handshakes. We do our, it's
right,
not that lucrative, but it's great. And the thing that I love the most about business is learning about people's businesses, meeting people, coming up with ideas, doing innovative things, doing things differently. And it's like we're stifled. We can't do that as Americans because everything is dominated by, the stock market and all these Wall Street people. I don't even understand what they're saying. Like, they speak in another language. It's hieroglyphics in terms of these, and it just doesn't, it's something, but it doesn't feel like business to me. It doesn't feel like something that's beneficial to regular people in America. Go ahead.
Yeah, and that's what really drew me to the idea of what Rocketdollar could become, which is that it's the recirculation of the money away from concentrated with the top 10 companies in financial services, who then basically have packaged products to invest in the top 500 companies, of which now the top 7 of those actually are the largest part of it, right? So you got a company like BlackRock, because they sponsor a lot of the index funds that American investors buy. They technically are the largest shareholder in excess of the founder. They own more Tesla than Elon Musk owns of Tesla, because people buy their index fund. But if that money were recirculated back, because the IRA money's there, and you said to yourself, hey, I'm going to invest in this local business to me, or buy the real estate on the other side, I think that fundamentally changes the makeup of America, because the money doesn't just leave the Finger Lakes region and goes away. It doesn't leave Austin, Texas and goes away. I live in Austin. I started the business here. So our early customers are pretty heavily dominated in this Austin, Texas, or Texas area. We have customers, by the way, at Rocketdollar early, who were private investors before the buyouts by major corporations in brands like the sparkling water company Waterloo, which you see in Costco, Siete Foods, which is now recently got purchased about 1.5 years, 2 years ago by PepsiCo for over $1 billion. So we had investors using Rocketdollar accounts who knew, who were early investors in these businesses using tax deferred monies. And I'm not saying that every deal works out that way, but at the time that they invested in these companies, these were a local business trying to make it to compete against LaCroix and San Pellegrino. And so forth. And now they're actually in the stores on the shelves next to those same brands right now.
It's amazing. That's amazing. So I love that.
Amazing. And that, that is possible using a self-directed IRA from a company like Rocketdollar. The part you have to bring to the table is, where do you have maybe either those relationships or find those opportunities or get into these types of deals? Because you can't just type it into your phone and invest in the company that way and so forth. But the idea and the concept is there for you to tap into your retirement dollars. And as you mentioned, it's a hedge. You said the chats are blowing up right now with people that, I really am afraid. You're right. But I can't do anything else with the money. There's literally nowhere else to put it, because if I actually just take it out and keep it myself, well, now all of a sudden it doesn't grow at all. And because of we talked about the continuous printing of money, well, they're devaluing that. So money sitting in my pocket is actually going down in value. And, Halloween is a good example. So every year for 12 years straight, I give $2 bills out for Halloween. And the funny thing, to all the trick-or-treaters, I've done that. I just got a new stash of them. Yeah. But the funny thing is that, every year I kind of joke around when I hand them out. The kids don't understand what I'm saying, but I always get a chuckle from the parents. I said, and the good thing is, it's going to be worth $1.88 next year. At the same time. Yeah, so,
That is a trick. That's not a trick. That's not a treat, Henry. That's a trick.
right. But I'm trying to explain, like I'm trying to explain because I'm a
No, I'm
geeky
joking.
finance guy, right? I got this interaction, trick or treat. Well, the treat is that you get a very poor economics lesson here. And
I shouldn't make fun of you. I shouldn't kid you, because I'm the girl who hands out pocket constitutions to the neighborhood children on Halloween. So I'm geeky like you, just in a different way.
Right.
Mortifying.
Those are more expensive
Mortifying.
than $2 too. So, but
Exactly.
they're worth more. But it's just the point that that's what's really happening. That the money that's sitting in your pocket actually is going down in value. At the very least, it's not going up at this point, right? And the only way for you to counter that is to diversify again. So how do you counteract the potential of a bubble? Like we talked about this, that what are younger generations going to do? I mean, they're in this situation where they might be mired in student loan debt. They can't get the down payment to get into a house. And they might be facing a situation, depending on the situation of their parents, to where they may need to take them in and take care of them. And that's the future that they look forward to right now. There's a lot of stresses on the average American person, but all that time, we've accumulated $36 trillion in these accounts. And my argument is that the industry actually is very happy for that money to sit in Wall Street coffers, because if that money moves, well, they lose money. They want it to stay there.
I agree. Yeah.
Right.
I absolutely agree. We only have about 5 minutes left. I don't want to keep you, because we
Sure.
contracted for an hour, and I don't want to go over that because I know you're busy. Do you want to take a couple questions? We have a few minutes. But we do have a couple questions on the live chat that I can read to you if you're interested.
Sure. Yeah.
Okay. LB Deb has a question. She said, if buying with a Rocketdollar IRA, say she wants to buy real estate, whose name is the real estate? Does the real estate go into, and who does the closing and pays the taxes and etc.? How does that work? Good question.
So you're the beneficial owner of the IRA. So, but the real estate is owned in the name of the IRA in and of itself. So it's the same. The analogy is similar to where if you do your business transactions using a trust, right? You would make those investments in the name of the trust, but you're the person who is the beneficial owner and the controller of that trust. So in this case, it'd be the Rocketdollar IRA for the benefit of LB. Purchasing, the home at 1234 Main Street, and so forth.
Okay. All right. Very good.
And then any income that comes out of it goes back into that account of which LB controls.
Okay. And trust. That's what the rich people do. Like, they all have their trusts and their things. So it does make sense. Like, so another question here. Isn't this a little bit, Mark the Regan, isn't this the argument for gold and silver? Another thing I love about Rocket, which is super, is that you can do, you guys know I love my gold silver IRA, and I have physical gold and silver. When I have extra cash, I will accumulate. I've been doing that for 10 years, talking to you guys about that. So I have the physical and the IRA, but you can actually, do one of the gold backed IRAs through Rocketdollar, right, Henry?
You can, yeah. So we have a gold entity that we own. We have a company that's a metals dealer, and so I mentioned that real estate was our number one asset class by dollar amount.
Love it.
Of the collective 12 billion that we have. Gold is actually also a top 6 investment for us as an organization, so you can do that. And if you follow me online, I've given lots of commentary about gold over the last 2 years, including a price prediction of over 4,000 in the early part of 2025.
There you go. How high do you think
gold? CBS. So
yeah, people are always wondering when's the bubble going to burst? When's it going to happen? Predictions. I don't want to put you on the spot or anything, but people are very stressed about that. I think it's what's driving the gold prices, right? So quick commentary on that, and then we can let you go. Because I think that's what's really on the minds of most of the viewers and listeners today is, how do we hedge? What should we do now? And where do you think, what is the timing that you see in all of this?
Well, I'll be real specific here that these recent highs over 4,000 have happened without the real, what you would call economic scare or global macroeconomic scare. So I think that we're one, either perceived or actual global macroeconomic scare, and we'll touch 4,500 in the next 5 months. We won't stay there, but we'll touch it, because right now we're hitting the levels we're hitting without an actual problem, which normally is what drives up the prices of gold.
Right. We haven't seen a sovereign debt crisis. We haven't seen a currency collapse. We haven't seen a stock market. We haven't seen any of those. And that's usually what would really propel gold and silver into the next stretch.
And so the anticipation is what's causing the run up right now. So when the anticipation is also faced with the actual realization of a real problem that could cause global instability, which I don't know what that's going to be right now. It's going to be some sort of war, resolution to a war, economic warfare, whatever that may be. The anticipation is there, and there'll be a catalyst that will shoot it up quickly. But I may look at that as an opportunity to take some chips off the table and redeploy into other asset classes. To be fair, I don't think it'll stay there, but I think it will touch it in 5 months.
Yeah, that's kind of what I'm thinking. Yeah, I mean, and we'll end on this. I'll end on this and let you go. Going back in the day, looking at some of the economic shocks and some of the really tough times that we've had in this country, in the United States of America, Great Depression and World War I, World War II, going all the way back to the founding, the opportunities to do something extraordinary and to build something are often coming out of the ashes of something else. The opportunities open up for people who have their eyes wide open, who are sober, who are prepared. When that collapse happens, those are the people that actually have the resources and the wherewithal to then parlay that into something that could change the future of their family, could change the future, of their kids and their grandkids. And so, as scary as it is, we talk a lot about the bad things that are coming. And as scary as those things are, I am very, very confident that people who kind of stay out of the fracas and the political whatever and just like hunker down and, revert to first principles and prepare, those are the people that are actually going to be able to do some special things. And your quick thoughts on that? Yeah, go ahead.
Yeah, I'd say that, this is obviously quoting arguably the greatest investor of all time, but I think we're very much on the cusp of a time where you should be greedy because most people are being fearful right now. So that's the Warren Buffett statement, right? Because for a long time, there are people that have been very, very greedy, which should make us fearful, but it's flipping right now. Right now, if you're the average American investor, you should consider being greedy because others are being fearful. And then where we come in at Rocketdollar is that we actually help you sort of realize that you have money that you may have not thought that you had, because the 401ks and the IRAs are out of sight, out of mind, because most people can't use it for anything other than investing in stocks or just putting 10% or 5% of their salary of every paycheck in there. And I think if nothing else, Rocketdollar opens up the idea that, wow, I have this accumulated capital and I can go do some of these things. You have to go find them. So go find your pickleball league, go find your private local business that may become a household name and sold in Costco and Sam's Club at some point, right? Go buy that real estate because you have knowledge of the other side of town where things are changing, because you've been in that area for 30 years and you know it like the back of your hand. You know it better than Warren Buffett.
It's true. It's absolutely true.
Unless it's a listener in Omaha, arguably he might know that area better, but you get the point.
No, I absolutely get it. Henry Yoshida, you can follow him actually on LinkedIn. A lot of commentary there. Where are the best places for people to follow you and get your commentary?
The commentary, probably LinkedIn. So my company actually puts a lot of stuff through me. So these are all the media things that we do at LinkedIn. Also on Instagram. So we repost that on my Instagram at FitFinanceHenry. And then as well on the Rocketdollar site is just an educational treasure trove of information related to self-directed IRAs, alternatives capable IRAs, and private investments in general. So we have over 300 articles there. And we're really proud because our articles actually get indexed and used by a lot of people just to learn about these accounts, whether they're customers of ours or not. So
I love that so much. This was such an interesting discussion. I learned a lot today. And I would love to have you on again, because I feel like we just kind of touched this. I have like about 100 more questions that I've just through our conversation. Right. I've been
you gotta
building.
You got to go find a deal on Amazon now. Like at the end of the day, right?
Yes, seriously, I'm going to go shopping. Henry, thank you so much. Rocketdollar will pop that URL, my URL, up in the live chat if you guys want to check it out. But you have a great day, and can't wait to have you on again and learn more. I think it's a great company and a great thing that you're doing. So thank you.
Thanks, Shannon. Thanks. I appreciate it.
All right. You have a great day.
Thank you.
And thank you to all of you for being with us. I told you were really going to like Henry. He's great. And like I said, I have a lot more questions for him now. And I see you guys on the live chat. Good stuff. Thank you, Henry. Karen Carpenter 27. Thank you, Henry and Shannon. Yeah, he's great. And, you guys know my thing is consistency. I really when I look for experts, whether it's in technology, finance, politics, real estate, healthcare, education, geopolitics, whatever it is, foreign policy, I'm looking for people who are consistent, people who have done and said the same things over a period of time, because that indicates that they are tethered to principles as opposed to whatever is, blowing in the breeze in terms of the political culture. And Henry is one of those guys. And it's why I'm really proud actually to be partnering up with the folks over at Rocketdollar. And Henry, I think we're going to get a lot more great information, especially, and this is critical. I know there's a lot of clickbait out there in conservative media about this or that and who's fighting with who and what Candace Owens is saying about what happened to Charlie Kirk and all the stuff. And that's dominating all the headlines. And yeah, I guess people find that interesting right now, but I'm actually more interested in surviving what's coming over the past 18 months and learning enough and building enough connections with enough people, both locally, but also in the country to make sure that we can survive when the tsunami comes. And that way we can help our fellow people and our fellow friends. So that's what we're looking to do. And I think Henry is definitely on the same page with all of that. So rocketdollar.com/ShannonJoy. Okay, tomorrow we have a big show. I'm going to be freestyle, so self-produced. You never know what you're going to get. I'm going to come on live, spend about a half an hour with you guys tomorrow, and then we're going to go behind the Rumble premium paywall for a Hey Fam Town Hall meeting. So this is your opportunity to take the mic. I'm going to join you. And it's a Zoom style meeting where you guys can ask me anything you want, make any type of comment you want. I will certainly be there and answer your questions, but it's also an opportunity for you guys to get on the mic. Tell me what you think about what's going on in politics. Tell me what you think about the show. Who would you like me to interview? What do you like? What don't you like? Are there topics or movements that you think I should be interested in and reporting on the show every day? It's really an opportunity for me to get a lot of feedback from all of you, and I want to hear from you. So that is what we're doing tomorrow, the Hey Fam Town Hall with Shannon Joy. So that's going to go up, and I hope that so many of you will join us. You can click on the premium to be a premium member on Rumble. There's a little gray button, I believe. I should probably take a screenshot of it. But if you just look to the left, there is a premium membership button. You just click on that button. It's $9.99 a month. You can cancel anytime. But we're really trying to get the premium memberships going. It's an opportunity for you to get commercial-free viewing on Rumble. And a lot of you complain to me about the commercials. I get it, but we got to keep the lights on here at the Shannon Joy Show. So that's why we have commercials. But you can have a commercial-free experience with the premium membership on Rumble and also get access to some of the exclusive content. And that is what we're doing with the town hall meeting. So that is tomorrow. And I'm going to try to do it myself. I'll probably mess it up, but I'm sure that you guys will all be able to join us, and I can't wait to hear from you. So thank you to our Died Suddenly producers. You guys are amazing. Great production here and the platforming over at Died Suddenly. Thank you to all of our sponsors and all of you on the live chat. We'll be back tomorrow to do it all again right here on the Shannon Joy Show.